Carta Liquidity. Features, strengths, weaknesses. Carta Liquidity is a platform providing private company shareholders and employees opportunities to sell their shares before a traditional IPO or acquisition. Key features include tender offers, auction programs, and employee-initiated liquidity events. Carta handles the legal and administrative complexities involved in secondary transactions, managing compliance, transfer restrictions, and tax implications. It's designed primarily for late-stage private companies seeking to offer liquidity to early employees and investors, potentially reducing pressure for an immediate exit and attracting and retaining talent with pre-IPO equity compensation. Secondly, it facilitates price discovery and matches buyers with sellers in a controlled environment. It is not designed for very early-stage startups or companies without sophisticated equity management systems. A significant strength is the centralized platform, integrating seamlessly with Carta's cap table management software, which streamlines the entire process. This integration provides a comprehensive view of ownership and simplifies shareholder communications. Carta's robust compliance framework, including securities law adherence and Reg D exemptions, is another substantial advantage. Furthermore, the managed process minimizes disruption to company operations. However, Carta Liquidity does have weaknesses. Firstly, fees can be considerable, impacting the net proceeds for shareholders. These fees include transaction fees charged to both buyers and sellers, and can be a barrier for some participants. Secondly, liquidity events are still subject to company approval and may not occur as frequently as shareholders desire. The timing and structure of these events are ultimately controlled by the company. Third, while Carta facilitates price discovery, the valuations achieved might not always align with individual shareholder expectations. There's a risk of shares trading at a discount to perceived fair market value, especially during periods of market uncertainty. Finally, participation is often limited. Not all shareholders are eligible for every liquidity event, creating potential frustration or perceived inequity. In conclusion, Carta Liquidity offers a valuable solution for private companies and shareholders seeking early liquidity. Its integrated platform and robust compliance are significant benefits. However, it's essential to carefully consider the fees, company control over event timing, potential valuation discounts, and participation limitations. For companies needing sophisticated equity management and talent retention tools, and shareholders seeking a potential exit path before an IPO, Carta Liquidity is a strong contender, but requires diligent assessment of its associated costs and constraints.